The major U.S. stock averages are coming back from a holiday weekend and they are trading higher. The Dow is gaining triple digits on this Monday. So joining me to weigh in on the action is Peter Cardillo of First Standard Financial. Peter, happy Monday. Great to have you here.
Good to be back.
Well, we got some weaker than expected U.S. economic data both today as well as at the end of last week. Now, markets were closed for a Good Friday, but we got those retail sales figures as well as inflation data. So what do you make of those figures before we dive into the market action?
Well, I think, the retail sales data was disappointing. However, I don't think it's the beginning of a trend. I think it was mostly due to poor car sales, which basically added up to weaker retail sales in general. I don't expect consumer spending to turn negative anytime soon. So I kind of think you might want to say it was an aberration due to the total weak car sales.
And of course, as we come back from the holiday weekend, we're seeing markets higher. And this does come amidst the geopolitical tension. Now, we have a lot going on in North Korea as well as the Middle East. And this week, focus may shift to trade as we see Vice President Pence as well as Commerce Secretary Wilbur Ross go to Tokyo this week. So what do you expect to see this week?
Well, look, I don't think the geopolitical problems are solved. I think maybe the market reversed today simply because of the fact that Vice President Pence, made a statement basically telling North Korea, hey, our patience is over with. So either reverse course or you're going to pay the price. And so I think the market took that as a positive and not necessarily a negative. But again, I don't think this geopolitical situation is over. I think it's going to come back to haunt the market. There's light volume, and so it's quite easy to, let's say, maneuver the market somewhat. And so I kind of suspect that, we're probably in the midst of a pullback. This pullback could probably take us down anywhere from 6 to 8%. And we're in earnings season now. So far, the major banking stocks that we heard from last week were not all that bad. The earnings were good. And I kind of think that's going to be okay.
Well, we'll continue to monitor developments regarding geopolitics, whether it's in the Middle East or in Asia. But you mentioned earnings, and we did get mixed results last week for the banks. This week we get earnings, economic data, as well as some Fed speeches. So I do want to ask about those inflation figures that we got last week. Does it change your expectations for Fed rate hikes at all?
Well, the inflation figures, turned basically sound. That was due because of the fact that oil prices were lower. But that's reversed. Oil prices have gained some $5-6 from the lower end of the recent trading range. And so now with oil prices around 53, we'll probably see those numbers turn around again. And I feel how I feel about oil. I'm very positive on oil. I think in the second half of the year, this quarter, we'll probably see $60 before we see $40. And speaking about oil, OPEC once again, the Saudi minister over the weekend basically said, "Hey, look, we're going to get oil prices up there." So I think the non-believers are going to have to turn believers.
Okay, Peter. Well, thank you so much for joining me at the beginning of the week, and we'll speak to you next week. Thank you.
My pleasure.